Hello, I'm Tony Greenham. I'm a director of the Mutual Banks Association and also executive director of Southwest Mutual, which is seeking to start a regional mutual bank in the southwest of England. And I'm going to run through why we think it's a good idea for the UK to have this form of bank and covering how we think it relates to other forms of mutual, such as building societies and credit unions. So I want to start on the next slide with some examples of these kinds of banks that exist around the world. So first up, the USA. Here's one that I just picked slightly at random, but it's Bristol County Savings Bank, not the Bristol in the west of England, the Bristol in Massachusetts. And I cite this one because quite often people aren't aware that the US actually has a large number of not just community banks, several thousand, but many of them are actually mutuals, and this is one of them. And I quite like his mission statement there that says that as an active corporate citizen, they're proud of their contribution to the economic, social well-being of the communities where they conduct business. That's an $82 billion deposit institution, so it's quite sizable. And it contributes, it makes charitable contributions to its local community. But it's a bank that serves business, importantly, as well as personal customers. So let's have another example on the next slide. Off to Switzerland, where they have a form of public bank known as Cantonal Banks that exists throughout the country. And Bern Canton here, which has about the same population as Devon, the county where I live, has a public bank that has assets of £26 billion and over 1,000 employees. And they do the lion's share of SME banking, small business banking in that canton. And the final example is actually further afield in Japan. So Japan has a network of cooperative banks, different regional banks, over 260 or around about 260. And again, picking Okinawa, which is a region about the same population as Devon, they have their own cooperative bank. And between them, they have customer deposits of £1 trillion and 9 million members. Again, this does very important amount of business lending, particularly in agriculture. So why does any of this matter? Well, coming on to the next slide, I just want to sort of make the point about why the UK is very unusual compared to other countries. And the first point is in relation to the ownership. So most other countries have a much higher proportion of banking assets in mutual banks. And that includes Germany, I've mentioned Switzerland as well, and Japan. But in the UK, we're unusual even in the fact that our mutual sector that is shown in pink on this graph, whereas in all the other countries, these are cooperative banks that do the full range of high street banking, from current accounts to business banking, as well as mortgages. Our sector is the building society sector. So that is quite unusual. I'll come on to why that matters. So the next slide actually looks at why credit unions in the UK are also quite different from credit unions in many other countries. So here I'm just comparing UK credit unions with local German cooperatives and credit unions in the US. So although there's a roughly similar number relative to population, there's a huge difference in the size. So US and German credit unions and elsewhere in the world, Canada is another good example. Credit unions tend to be much bigger and do a broader range of activities. They're not as highly regulated as they are in the UK. So effectively, in many other countries, credit unions do function as larger scale regional cooperative banks. So if we go on to the next slide, we can look at the regional dimension. So I've looked at ownership now, and this is just sort of emphasizing the fact that if we include commercial banks, so just ordinary for-profit banks, it is very common in other countries to have them. So this comparison here shows that Germany, USA, France versus the UK. And it's really making the point that we just simply are missing an entire segment of banking infrastructure. We do have credit unions and CDFIs, the community development finance institutions. But when you look at the total scale of assets in our sector compared to regional banks in other economies, we're talking about a difference of 3 orders of magnitude. Next slide. Now I'm going to run through 5 reasons why this form of the regional stakeholder bank, so ones that are not shareholder driven, why they create benefits for consumers, members of those banks, but also for the economy and society as a whole. And so I'll run through each of these in detail. So we'll start with financial inclusion. So on the next slide, we'll look at the detail of some of the statistics. Now, financial inclusion has been considered in the UK over many years to improve access to banking and to fair and affordable credit. And so there has certainly been progress, but this is not a finished job by any stretch of the imagination. There's still many people who are uncomfortable with digital-only banking. Access to cash is a problem that hasn't yet been solved. Many people, non-users of the internet, for example, as well as people who quite simply can't get access to a fully functioning current account. Now, what we find in looking at international evidence, it's regional stakeholder banks that tend to do a much better job of financial inclusion for individuals and households. So that's reason number 1. If we go on to the next slide, we'll look at businesses. So this is probably the most technical slide I'm going to throw at you today, but small business finance, it has been shown that it really makes a difference where the lending decision is made geographically in relation to the borrower. And quite simply, the closer geographically the lending decision is made to the borrower, the more information is taken into account to reach that lending decision. And that simply means that local lenders are able to bring a broader range of what's known as soft information into account, and they can therefore make more positive lending decisions without dropping loan quality. As there's a reams of research that lie behind this, particularly in the German market. So local lenders can do more loans to smaller businesses. The third reason, if we come on to this, a little bit more on SME finance, just in terms of the size. So, there's a report recently that came out from Big Sided Capital that there's still a 1 billion funding gap. There are many estimates that are much higher than that, running up to several billion, in terms of the shortage of business lending that is not getting fulfilled in this country. And 73% of businesses say that they would rather not grow if the alternative is to have to seek to borrow money from a bank, because essentially there's a loss of trust in high street banks from smaller businesses. So that's the SME finance piece. If we go on to the third reason, this is to do with what loans are actually allocated. What do regional stakeholder banks use depositors' money for? Well, to answer that, I'm going to say, well, what are high street banks, the big banks, use it for? And the answer is overwhelmingly for financial lending and speculation. A remarkably small chunk of it is lent to small businesses in the UK. About £2 out of every 100 is actually ploughed into sort of a small business lending. And actually, that means that for a county like Devon, actually, that small businesses lend more to banks than they get back by quite a considerable margin. And then I've also put in there the amount of fossil fuel finance that has been contributed by the UK's largest banks. So the point here is that what regional stakeholder banks do with the money that's in local economies is they reinvest it back into local economies, but also do so to more useful real economy purposes. And part of our mission certainly will be to finance the just transition to a low carbon economy. So if we go to the next slide, we can look at regional inequality. Now, again, academic research shows that the presence of regional banks, and particularly regional cooperative banks, interestingly, makes a positive contribution to levelling up. The phrase we're all now getting used to tripping off our tongue. That previously we had rebalancing the British economy, and we've had very many attempts to address the much greater economic inequality that exists in the UK than in other comparable countries. So the gap between some of the less well-off regions, which I've got on this graph, Cornwall, Devon, Somerset, Dorset, and London, that gap is far bigger in the UK than other economies. And one of the reasons, not by any means the only one, but one of the reasons is that we lack strong regional and local financial infrastructure, including banks. So I come on finally to the fifth sort of positive impact of regional banks, and this is to do with resilience. when things do go wrong. So this looks at the period following the financial crash in 2008. And it tracks what happened to lending amongst banks in several economies. So we're starting with Germany. Now, Germany has got three different types of bank. It's got the local cooperative banks, as well as the public savings banks. And then, of course, the big commercial banks too. So what these lines show you is sort of looking at what was lending to the real economy and businesses post the crisis. And both the local savings banks and the cooperative banks steadily carried on lending. They increased their credit to local economies and small businesses, whereas the large banks in Germany actually shrunk their lending. So what happened in the next economy, the next slide shows us Switzerland, which also has three forms of bank, the same as the Cantonal Banks I mentioned earlier on, public savings banks, as well as local cooperatives, and also UBS and Credit Suisse. Same story. It's the regional stakeholder banks, the ones that weren't shareholder driven, that carried on supporting local economies and lending throughout the aftermath of the crisis, whereas the large banks significantly shrank their loan books and withdrew money from the economy. One more example, next slide, we'll look at Japan. I mentioned those Shinkin credit cooperatives earlier on. They also performed far better than the large Japanese banks after the financial crisis in supporting local economies. So finally, let's look at what happened in the UK on the next slide, which is a grim picture, because not only did the major banks shrink their loan books by even more than in other countries, accentuating the recession, but the point is we don't have those regional stakeholder banks to pick up the slack and to support businesses through troubled economic times. And that has a severe impact on our overall GDP. So those are sort of five reasons why regional stakeholder banks contribute to social economic welfare in other countries, and why there's a strong case for them here. On the next slide, I look at some of the think tanks that have come to similar conclusions, and indeed politicians. So, the RSA Inclusive Growth Commission recommended that regional banks should be set up. We've got the community wealth building movement, which has as one of the five pillars local finance. Also, the local London School of Economics project has talked to our regional banks, the Kruger Review, and most recently, the All-Party Parliamentary Group on Fair Business Banking, in a recent report on levelling up and SME finance, recommended that the government help the establishment of regional mutual banks to help with business lending. And I've also listed many think tanks that have come to the same conclusion. Kevin Hollinrake, the chair of the APPG, describes this proposition as compelling, as does John Glenn, the Minister for Banking. So I'll sort of draw a conclusion on the next slide as to where this sort of, draw it all together. So here are the key points. The UK banking system is quite out of line with international competitors in being not just unusually concentrated with, particularly business lending dominated by a handful of banks, but also it's all the banks are the same kind of bank. They're all, VC backed if they're new entrants, venture capital backed, or they are publicly quoted. All of them are driven by short-term profit over long-term economic welfare. And so that's a problem. Regional banks in particular are completely absent really from the UK, whereas they play a major role in other economies in both household lending, but again, particularly in business lending. So although we do have obviously a financial mutual sector in the UK, not just insurance companies, which I haven't talked about, but in terms of lending, credit unions and building societies, I think it's the case that what both those sorts of institutions do is different from, and I think would be complementary to, the roles that regional mutual banks play in other countries and would also play in the UK. So once again, to sort of hammer the point home, we can look at many other countries for good examples of this style of bank, of regional mutual banks, and how they contribute positively. So It'd be very interesting to get into any discussion on this, but we do believe that we see gaps to be filled by this type of institution that, as I say, would be largely complementary to the work of credit unions and building societies. So I just want to finish off with a final word on the final slide from overseas, again back to the US where we started. And Michelle Bauman is a governor of the US Federal Reserve. That is, of course, their equivalent of the Bank of England. And she's chair of their subcommittee on smaller regional and community banking. Now, imagine if the Bank of England had such a committee. It doesn't. But nevertheless, the US Federal Reserve does. And what did Michelle Bauman say recently? She said that community banks are irreplaceable in responding to the needs of consumers and small business clients. And she went on to say, as a former community banker, I know that few understand their communities better. Well, we strongly believe that communities in the UK deserve this form of banking too. Thanks very much.